Folks, welcome back. So we're looking at the NASDAQ. Here's the daily chart. And if you have not joined the free Telegram channel, this is one more plug. I'm going to do this a lot. So if you've already joined it, just accept the fact that I'm inviting other people. So we're looking at the daily chart of the NASDAQ, and I'm going to cover what I shared in the Telegram channel live and direct. It was right to the point, and it delivered like gangbusters today. So uh, I told everyone in the channel to note these levels as I have here. Okay. And what I was doing was, if you look at this wick right here, see that? I actually have a Fibonacci laid across the wick from this candlestick's close into its high. And I'm only highlighting 50% level, okay, because I want consequent encroachment level noted on that. And then I have the same thing on this candlestick's discount wick. Okay, this is a premium wick when price is below it. When it's above it, it's a discount wick. This discount wick here at the time of formation, looking at it when the market opened here, trading down into it. So I'm noting the close to the low, and that is the midpoint there, and the coordinates are here. Okay, so that way you can replicate this on your own chart. So make sure your numbers agree here for that candlestick, and then this candlestick, you're gonna do the same thing here, coordinates for that one. Okay, just pause the video. I don't want to stay on it too long. And then what I did was I got the consequent encroachment of these two candlesticks. Okay, right in here. Now, this is a gray pool theory. Now, you're not going to find it in Wyckoff. You're not going to find it in anything else. I promise you, it's just my stuff. Okay. You're going to see a lot of people start using it, and they're going to try to pretend they can teach it, that they don't know what they're doing. So just know that in the future, I will reveal more details about it. But when and how to use it, obviously, you can see it's mine. I showed you in the Telegram channel what to focus on. And that gives us this level here if we get the consequent encroachment of this level here. So just look over here, 22,099.50. So to 22,163.50. Right? And we want 99.50. So these two numbers agree with that number and that lower number. And I already know I'm confusing some of you, but it's okay. I was demonstrating today. All right, so that's the level you're going to get. It comes to 22,131.25. Let me get this out of here. Too many of them. 22,131.25. Okay. So when you have this information, you can then blend it with the last 3 days of high, low, open, and close. Okay. So no indicators needed, no overlays needed, no complicated things. Okay. Very simple strategic approaches to using data that the algorithm itself will refer back to. Now, if we look at this level here, what level's in close proximity to that? Well, the previous day's low is just a little bit too low for it. But the previous day's body lays over top of that, so we're not going to worry about that. And then we have this candlestick here. So we have this candlestick's high coming in at 22,124 even. That's about as far as I think it would go down into this gray pool. And the gray pool is the difference between this candlestick's wick and this candlestick's wick's midpoint or consequent encroachment levels. So in a different way, but saying the same thing, it would look like something like this. This is that's the gray pool right there. It's just a little specific location where I'm expecting a daily high or low to form. And again, like I said, you're not going to find that in anybody else's stuff. They're going to pretend that it's some dead guy's material because they can't stand it. But the real maverick is here telling you what it is. The McCoy, the one and only, the creator of it. There it is. So when the market trades down into that, I want to be, if I'm short, I want to be getting out of it. If I'm wanting to be long, I can take that as a long entry, but it has to give me a PD array once it trades down to it. So just know that inside this information here, that's what we're looking at. And I'm going to take the box off of it now, and we'll leave just the lines as I showed in the Telegram channel. So we're going to drop down into a 1 minute chart, skip right to the meat of the discussion here. All right, and right away you can see there's an old high here. The blue shaded area is that volume imbalance on the daily chart. I'm leaving out a lot of these things so that way you look at it in the Telegram channel. I actually have 2 video clips where you can see me doing the executions and where it's going into the limits and taking profits. So you're welcome to take a look at that there. Don't just look at what I'm showing you here and think, oh wow, the fact that it's showing this here, okay, you can't do that with market replay. Okay, just remember that. And market replay never lets you see the countdown to the candlesticks. So for the fellas that are asking all the time, you know, is this market replay? In the comment section, I don't use market replay. There's no need to. If you join the Telegram channel, you'll see that I'm actually calling this stuff in advance. The right bias, the right direction, all that stuff. So it's free, folks. I don't know why you guys are kicking and screaming about not wanting to join it or not going in there. But all your mentors are doing there taking notes. So it's probably better for you to get it from me than to pay for it from them. So this volume imbalance is from the daily chart. And today we were already expecting, as I gave guidance in the Telegram channel, that we were going to have a very small opening range gap. Now, previous regular trading hours settlement price, we don't know if that's going to be the high or the low of the opening range gap until 9:30. So at 9:30, right here, at that opening price, we noticed that it opened lower than previous regular trading hour settlement price. And you find that by going into regular trading hours. You can see that here. Okay, so that's the separation, small little gap. You got 3/4 fill on the gap and then broke down lower. So we're gonna go back into regular trading hour. I'm sorry, electronic trading hours. Okay, and the market trades down, clears sell side here, then it trades up, takes out buy side. I gave guidance on both those reference points, and then I gave the 934 as the first presented fair value gap. So as we traded down, I said I was looking for weakness before it traded down there. I gave guidance that I was wanting 22,131.25. That was my initial interest. That was my draw. Okay, so when price is up here, what does that mean? Does it mean it's bullish? No. It means I'm bearish. I'm looking for it to trade down to this level. So I gave this first presented fair value gap. I said, we want to see it act as an inversion fair value gap. And wouldn't you know it, it trades up into it. Small little gap in here. I'll let you annotate that for your own notes. But then we break down, come back up, retest it one more time, break lower, trade back up again, and then slams it down into our objective that I gave on Telegram. Now, it took me 2 trades because I got stopped out on the first one, but not in a loss. Look at the recordings. You'll see it. It's the truth. But if you look at the executions, you can see all the business here matches everything that's on the Telegram channel. So I got real close to nailing the low of the day, and it overshot it a little bit. Now, if you look at the high of the candlestick that creates the lowest point on the daily chart for that gray pool, that wick above the candlestick, if you look at the actual candlestick's high on that day, it's 22,124 even. So that means that's about as far as it's going to go down. Let me take these executions off for a second. I'll show you something. You put a line on your chart at 124 even, right there. You'll notice that the body stopped dead in its tracks right there. What's the close on that candlestick right there? 123.75, and the open on the next candle comes in at 124 even. That's perfect. Perfect. But it overshoots it a little bit because the wicks are allowed to do the damage. Then the market turns, trades back up, comes right back down to my level, the gray pool, 22,131.25, and then rallies up. Nice little fair value gap in here. And we talked about how price when it came down to this level here, stopped right at the consequent encroachment of this wick, and it rallied back up. I said it needs to roll right through this consequent encroachment if it wants this 22,131 and a quarter, and just like a script, it does that very thing here. Then the market returns back up into first persistent fair value gap. On the heels of the lunch hour in New York, you can see how the market does later on trade into the first persistent fair value gap again. But now it's because it's above the market. Market trades down to it, rallies back above, and then clears the buy side from earlier in the morning over here. Okay, so just shy of $11,000, 2 trades, no losing trades, nothing edited, nothing called incorrectly, all live in the presence of over 80,000 people now. You decide. It's out here for free. You're invited. No PayPal required. I promise you. Come in and you see this repeat over and over and over again. You're going to be better at tape reading. That's the only thing I'm promising. It's not a signal service. It's not me trying to get into trades. I'm telling you what to watch for. And I promise you, you will not find anyone else out there doing it this consistent, this precise, with the logic that I already taught you in 2024. The idea is I'm using the first presented fair value gap as a mechanism to get long or get short. Or, in rare instances, I'll use it as a draw for a trade that will be either market reversal or something to that effect. But generally, what I'm looking for is I'm using the first presented fair value gap. When I give the bias in the Telegram channel, you already know what direction I'm looking for. And I'll tell you why I'm not interested in a certain other direction. And if it goes against my bias, I do nothing. That's logic. That's discipline. I'm not out here to try to entertain anyone, and it's for free. I can't monetize Telegram. So what is my motive? I like doing it. I love being different, and I'm ahead of the pack. There's no one going to do it for free this well and want nothing in return. I don't even want your thank you. You don't even need to do that. Just show up. You'll get better at reading the tape each day, each week as it goes by. Hopefully you found this insightful. Until I talk to you next time, Lord willing, be safe.